Hey everyone, welcome back to Corporate Decoder. Today we're diving into the world of Yoshiharu Global, the company trying to bring Japanese ramen to the masses. This report looks like a steaming bowl of numbers, but I think we can find something delicious. We will see if they are managing their dough or just noodling around. This is a filing with the SEC where they are registering to resell shares. Essentially, some big investors want to sell their stock, and this document is how they let everyone know. The good thing is they want to resell shares. It means there are people willing to put money in it. This form is like an introduction for Yoshiharu to the public markets. It's a registration statement, meaning they're getting the okay to offer and sell securities. Think of it as getting permission to play in the stock market sandbox. Yoshiharu Global Co. is a Delaware corporation, meaning it's officially recognized in that state. They've got a tax ID number, an address in Brea, California, and a phone number. This document tells us James Che is the chief executive officer and also the person you can contact if you have legal matters. Basically, he is the main guy. There's a box checked here, which means they might offer these securities over a longer period, kind of like putting items on sale bit by bit instead of all at once. There are more boxes, and Yoshiharu identifies as a non-accelerated filer and a smaller reporting company and an emerging growth company, which basically translates that they are still growing. This preliminary prospectus is from April 30, 2025 and subject to change, so nothing is set in stone just yet. Here, Yoshiharu is registering the potential resale of 3,600 shares of common stock by some selling stockholders. It involves various agreements from March and April 2025, including shares tied to cancelling debt. Investors agreed to wipe out about $3.5 million in debt in exchange for shares or warrants. This might imply that the company needs money, but it has a clever solution to the problem. Yoshiharu won't get any money from these sales. They are registering the resale of shares, so the selling security holders can put money in their own pockets. The exercise price per share of the warrants is $2.50. They'll cover the registration cost, but the selling stockholders pay the sales commissions. Their Class A common stock trades on the Nasdaq capital market under the ticker YOSH. These resales could affect the stock price, especially since a lot of the shares were bought at lower prices than they are now. Like every investment, there are risks. We will scroll there soon to see what they are. These are all the common terms and what they mean. Now let's dive into the forward-looking statements. Basically, these are statements about the future. The company warns that actual results could be different. This summary is a highlight reel, so let's see the key points. They want to bring a modern Japanese dining experience to the world. They began in Southern California, and now they operate 10 restaurants with a few more in development. They specialize in ramen with a warm bone broth boiled for over 12 hours, which they pair with savory ingredients. This section is very important. Private placements mean private sales of stock, usually done with a small number of investors. Here's a summary on private placements that are happening. On March 12 of 2025, they did some deals to sell $14,000 of stock. On March 17, they sold warrants for $1,200,000. On March 24th, they made a deal to cancel $2.5 million of debt in exchange for warrants. A warrant is the ability to buy stock in the future at a set price. The warrants let the holders buy Class A common stock for $0.01 per share. This means that if exercised, these warrants could dilute existing shareholders since the price is much below the current market value. BS1 Fund will get Class B common stock, which will result in a change of control. On April 9, they cancelled another $1 million in debt in exchange for warrants. We are registering for resale by the selling security holders up to 2,720,000 shares of common stock. This means that when the stock is sold that has the warrants to it, it could have a negative effect. Let's go now to risk factors, as it's one of the most important sections. The company says it may not be profitable and that their plans to make sure they have enough cash might not work out. They lost millions last year. To cover their operations, on January 6th, 2025, they got a loan with a 10% discount, and they also made a deal to potentially sell up to $10 million of stock in the future. They are working to fix a problem with their stock price, otherwise Nasdaq, the stock market, could delist them, which would make it harder to raise money. The company believes it has enough to operate for at least the next 12 months. However, if things go wrong, they may have to shut down. Their long-term success relies on opening restaurants and expanding operations successfully. If they can't find good locations, can't negotiate good deals, can't get permits, or can't manage costs, they might not be able to grow. Their restaurants are mostly in California, so problem specific to California could really hurt them. Expanding into new areas might be risky because they don't know those areas well, and this can make financial results unpredictable. If sales at existing restaurants aren't as high as they need, it could cause a decrease in profitability. Opening new restaurants is expensive, and if the new restaurants don't perform well, it could affect profitability. If people stop visiting the malls where their restaurants are located, their sales could go down. Because they are expanding with franchises, they could face challenges and a negative impact on their business. If franchises become financially distressed, it could seriously harm their operating results. There is lots of competition from other restaurants, and that could affect their results. If they can't get the food and supplies they need from their suppliers, their business could suffer. Inflation, especially rising food costs, could hurt their profits. It's possible they will need to raise more money in the future, and if they can't get good terms, it could hurt their business. Bad news about one of their restaurants could hurt sales at all of their restaurants. If there are any cases of food poisoning, it could seriously hurt their reputation and business. Their CEO has loaned them money from time to time, and he could ask for it back unexpectedly, which could hurt their business. They lease all their restaurant spaces, and if a restaurant isn't doing well, they're still stuck paying the rent. If they can't get the fresh ingredients they need, it could hurt their business. Changes in how people think about food and health could affect what they can serve and how people react to their menu. Their business depends on technology, and any problems with those systems could hurt them. If their marketing doesn't work, they could waste money without seeing higher sales. If they fail to get social media right, it could harm their business. They rely on their key people, and if they lose them, it could hurt their business. Rising minimum wages, especially in California, could increase their labor costs. If their employees unionize, it could significantly change how they compensate people and increase costs. If they can't get visas for workers or verify their eligibility to work, it could hurt their business. If they don't follow anti-bribery laws, it could damage their reputation and business. Delays in obtaining construction permits can make it more expensive to open restaurants and therefore harm their business. Lawsuits over intellectual property could be expensive and harm their brand. Government regulations could make it difficult to open new restaurants. If they don't follow regulations about selling alcohol and food, they could lose their licenses. A security breach involving customer data could damage their reputation and finances. Lawsuits could distract management and cost them money. If they don't have enough insurance, it could hurt them financially. If they can't accurately report their finances, investors could lose confidence. Changes in accounting rules could hurt their business. Being a public company is expensive. Being a small company, they can take advantage of certain exemptions. Their management doesn't have a ton of experience managing a public company. If they don't comply with NASDAQ rules, they could get delisted, which would make it harder to raise money and hurt the stock price. They won't get any money from the resale of shares by the selling stockholders, except for the money they make when warrants are exercised. The company will pay for all costs associated with putting out this document. The stock trades on NASDAQ under the symbol YOSH. They don't pay dividends, so investors rely on selling the stock for a profit. Okay, let's talk about the numbers and see if they match what the company wants us to believe. Here it is, net loss. They lost $27 million in 2024 and $3 million in 2023. They keep trying to make things work, but it keeps falling back down. They sold some shares to Alumni Capital, but it terminated. On January 6, 2025, they made a deal that would allow them to sell up to $10 million in Class A. Common stock, however, they have been unable to use the agreement since they cannot register the shares and need to file this annual report. During March and April 2025, they entered into agreements to raise capital and sell $7,150,000 in Class A common stock and $4,000 in Class A common stock and $4,000 in warrants. They were notified by NASDAQ that they were not in compliance with the $2,500,000 equity requirement. Their expected cash flow combined with funds from these deals might be enough to fund operations for the next 12 months, but there's no guarantee, which is honest of them. Here are some key numbers that we will see. Total revenue here increased from about $9.2 million in 2023 to about $12.8 million in 2024, so that's good. Total restaurant operating expenses increased from $8.8 million to $11.14 million. Their general and administrative expenses were about $3.8 million for 2024 versus about $3.4 million for 2023. And the RRF loan forgiveness in 2023 was a major gain that didn't happen in 2024. The income tax provision was lower in 2024 versus 2023. The net loss decreased from $3,064 to $2,065,869.89. Operating activities actually generated some cash in 2024, while used cash in 2023. Investing activities used more cash. Financing activities brought in cash in both years. Let's look at their future obligations here. This might give insight about how well their business will be. Their capital lease payments show more than $13 million in total obligations. Important to notice, they also never asked a public accounting firm to audit their internal control, which means they might have problems with their accounting, but they don't know. Now let's talk about the business part of this document. Yoshiharu wants to bring its Japanese ramen to the mainstream. It has made key ingredients from scratch and has been health and taste oriented. Their profitability depends on their ability to react to food supply costs. Inflation has not had a material effect on their operating results. The company admits it has not been performing an evaluation of their internal control. This indicates a risk that they don't have proper accounting and their financials might be off. If they get their licenses suspended or revoked, they can't sell liquor or provide food. Their common stock is listed on the Nasdaq Capital Market under the symbol YOSH. The summary is that Yoshiharu is trying to get their act together and is working to fix issues with compliance. Now let's talk about directors and officers. J. Kim resigned on February 13, 2025. On March 17, 2025, they appointed Sungon Chae. Executive compensation to James Chae's employment contract, and compensation is listed. Let's see who really owns this company and is making money. James Chae owns a ton of the Class A and all the Class B shares, giving him a whole lot of voting power. They are currently not involved in litigation. Now let's talk about my opinion on this. It is important to understand that many facts and figures in this document are subject to change. So here is what we found. Yoshiharu is expanding. They took a hit from the pandemic and they are taking on a lot of debt and are selling stock. They've got challenges and they face a delisting, which is not a good thing unless they figure out how to get their stock price back up. All of this is a big risk. I would rate them a hold in their current state, which means to neither buy nor sell and see where things go. Thanks for watching. If you enjoyed this deep dive into the Yoshiharu filing, please like, comment and subscribe. I'll see you in the next one.